Hey guys, this is Tanner Invest here. Thanks so much for tuning in. New video where I'm about to show you $70,000 worth of buys that I've done this week. I actually had an IRA rollover in Robinhood. So I had a 401k that I rolled over into an IRA. And so that's where this money came from. So it was invested, and it was invested actually into just a standard target date fund. But over the last 3 years, I've actually beat the market. So the S&P 500 is kind of the benchmark of people like comparing their portfolio to. And so over the last 3 years, I've actually outperformed S&P 3 years in a row. And so my goal is to do it again. And right now I'm doing it pretty hard this year. I think I'm up like 40 to 45%, and the market's up say like 7-8%. So I'm really excited that hopefully I can keep that up. But before we hop in, I want to say, guys, I've officially been monetized. So if you see ads pop up on videos, you just know if you see it, you can skip it. That's supporting me directly. So I really appreciate all the subscriptions, views, everything like that. You guys have been awesome, and I can't wait to just keep this going. I hope to hit 5,000, 10,000, 100,000. Who knows where I can go with this? So I'd love the support. And then let's go ahead and hop in. I'm actually trying something new this video. So I have like this new layout here that I'm just testing. This took me 2 seconds to come up with, but I thought it was pretty cool to help with this video specifically. So this is where I'm going to show you the stocks, and keep in mind the stock order is not like what I think's the best or worst. I'm just going to tell you the stocks in the order in which they're in my Robinhood account, which is the order in which I bought them in. So the first stock I bought bright and early in the morning yesterday, before it had a huge run up, was Duolingo. So yesterday, this stock, I bought 30 shares at $10,200. It had like a 12% gainer day, and then now it's down like 8%. So I'm still a little bit up on this position overall, which is great. But you might be asking, what is Duolingo? So Duolingo is a learning app, and I specifically didn't say language learning because they've added on new software or new learning modules for chess and math. And this is just a fantastic app, guys. I use it. It's super engaging. It's very fun to use. I feel like learning in it actually like helps you, doesn't hurt you. Like it does a great job at teaching. But the great thing about this business, not only from the product perspective, because that's one of my key investment philosophies, is I don't want to invest in something that's not a good product, not something that I wouldn't want. So now you can see my full screen here, and from a fundamental perspective, this company has the prettiest charts you'll ever see. Their daily active users up and to the right, their revenue up and to the right, their net income going from negative to positive, their shares outstanding. Not the prettiest, okay, maybe not the prettiest, but they're working on this. As you can see, they're actually kind of slowing down quite significantly. And then their cash to debt ratio is just absolutely beautiful. They have barely any debt at all, quite a bit of cash on hand. And then one thing to note is you might be asking, well, what happened here in the monthly active users? Well, I think what's going to happen is like a little bit of cyclicality here. Just like with, a gym membership, right? You're probably going to, people are going to go to the gym January 1st and say, it's a new year. I'm going to learn, I'm going to go to the gym. Well, same thing is probably happening here with Duolingo, where it's a new year. I'm going to learn a new language. I'm going to learn chess. I'm going to learn math because I can't count. Those people are probably, falling off and trimming, but what we really want to see here is this daily active users continue to go up, because those ultimately are what's turning into those subscriptions. And so let's go ahead and hop into real quick the price action. Price action over the last month is quite a bit down. You might ask what the heck happened here. This is earnings. So after people originally got the numbers out of their earnings, it popped like crazy, and then subsequently fell because of the earnings call. Not really sure. I did listen to the earnings call and thought it was perfectly fine. I thought the company's in a great spot. So I personally was like waiting for this to be able to buy into this. Now let's look on the last year, because we're still up 70%. It's like kind of, the whole zoom out thing, right? Zoom out, because this company is on a ride, and it's going left to right, up to down. So that's what we want to see. Now, let's go ahead and hop into the presentation here, because we always want to look into the investor presentation. All these numbers look beautiful. 40% year over year, the revenues 41% year over year, net income 84% year over year. But down here, one thing that you always need to mention, guys, is any quarter, whenever you're looking at numbers, you need to look at what quarter you lapped. And so quarter 2 2025, they lapped and are comparing numbers to quarter 2 from 2024. And Q2 of 2024, they had one of their best quarters ever where they had 59% daily active user growth. And this quarter, they had 40% year over year. So that's really impressive given the fact that they were up against a really tough quarter. And then the only other thing is that we actually, the CEO at the end of his message mentioned that if you're curious about what's coming next, tune into DuoCon on September 16th to see more of what we've been building. So DuoCon is going to be exciting because who knows, maybe they're going to announce a couple more modules. We could see history, science, all kinds of different things, different games that are popular out there. So I really think there's a lot more room to grow within this company. And then before we go, I love this chart. The daily active user versus monthly active user debate. We just want this number to go up and to the right. We want more of those monthly actives to transfer into daily active users. So they do such a good job at marketing, guys. Like if you have the app on your phone, you get the push notifications are hilarious. They actually send you emails if you don't like respond to the push notification. Like it's actually really funny because they branded themselves as like the mascot being this angry bird. And anytime you don't get on, the angry bird is like, "What the heck's going on? Like, why aren't you on?" And so I love that. I think it's hilarious. Their social media is on TikTok and Instagram, things like that are really impressive. Wanted to touch on that too, because the bear case around this company is that a month ago or a few months ago, they had a big issue where it's kind of like the 2022 Netflix boycott, where it's kind of similar online. The CEO basically came out and said that they are going to be using AI to replace future jobs. And he's like, listen, like we're not going to replace any humans today, but AI will be a big part of what we're doing. A lot of CEOs have been saying this. Salesforce, the CEO, Mark Benioff, you have Andy Jassy from Amazon. They're all using AI. AI is a big theme, and it's going to be a big theme in this video too. But Duolingo is in a good position to where their margins are going to go up over time. They're clearly not getting hit from a daily active user perspective from these boycotts. They did lose some TikTok followers, but dude, if you're out there crying over AI, just get used to it and buckle your seatbelt in, baby, because we're not going anywhere. AI is not going anywhere. Can tell you that right now. And so one other thing to take a look at, I just want to show you the tip ranks. We do have 18 analysts covering this through tip ranks. We see 14 buys and 4 holds. So some really high established, analysts here that have, pretty big upside at 540, 500, 460, 450. And the X community too has a ton of like retail analysts that have been eating this stock up as well. And so I really like X, guys. If you're ever curious about how I find stock picks, a lot of times it may be because I'm hearing it just over and over on X or YouTube, and I'm hearing other people's thoughts on it, and then I'm ultimately agreeing with them, doing my own research, and then deciding whether I want to buy or not. So that is Duolingo. Let's go ahead and hop into the second one. All right, so let's go ahead and get into the second stock here. We have number 2 coming in. It's the lowest position that I purchased, and it is Salesforce, ticker symbol CRM. You guys might be wondering, Tanner, you just talked about AI. Why are you getting a company that's going to die to AI? Well, I think you're wrong. I think that CRM is going to be here to stay. So what CRM is in Salesforce, it's a customer relationship management software. So you guys may know this already. I'm actually in tech sales, and I've been using Salesforce at multiple different companies. I've worked for 3 companies using Salesforce throughout my 7-year career. And I really think that Salesforce isn't going anywhere. Companies rely on being able to have a relationship with their customer ultimately. So you might be, a lot of people are very confused as to what it does. So let me just break it down in my day-to-day, what I use it for. Anytime I need to pull reports regarding the customers, any type of data at all, I go to Salesforce. Any type of quoting for customers to be able to give them a price of my product and ultimately propose a solution for them, I go to Salesforce. Anytime there's a customer issue, I can go to Salesforce and look at the case to be able to identify how they need to be helped, where they can be helped, and what the status is currently, because it completely isn't just for salespeople. It also communicates with support, operations, human resources, everything. So companies rely on Salesforce all the time. Even for like earnings, for quarterly earnings that we take a look at all the time, what do you think they're doing? They're going to their leadership, their management. They're saying, hey, what's in the pipeline? What are we projecting for the year? What are we projecting for next year? These are all things that are being pulled out of some sort of CRM platform. And so now what's really cool about Salesforce is that they are actually getting into something else. And so I'm going to take a look at this other screen here. They are actually getting into um, Agent Force, which, sorry, right here. So they're getting into Agent Force, and they're asking their companies to become an Agent Force company. So what does that mean? Well, a lot of these things I just mentioned that I'm in every single day using Salesforce, a lot of that stuff right now is manual. There are some automated stuff that we've actually, the company I work for already has Agent Force as well. And so I'm already seeing it in real time how this is helping. But I can only imagine a world where a lot of the tasks I'm doing on a daily basis are fully within using Agent Force. So, for example, if I need to pull a quote and I need to get a pricing for a customer, what if I can just type to an AI chatbot LLM type model where I can say, hey, this is what I need. This is for this customer. Can you go ahead and create a quote with XYZ ABC? And then they can do that for me. So I'm saving 30, 45 minutes at a time. Or, hey, I need to create a case for a customer. Please create a case and submit it to this team. Boom. It does it automatically. There are things like whenever I get a customer's information signed, we have an integration with DocuSign. I send a DocuSign to the customer. They get that information in the system. That goes to my operations team, and we have people manually, checking to verify if their information from their business is correct on that DocuSign. That all could be automated in the future by using Agentforce. So I'm really bullish actually on the future of how Salesforce can use AI and not specifically how AI is just going to eat Salesforce alive. You can see here in the last quarter, they had 1 billion plus revenue in Data Cloud and AI ARR. Fantastic. And then you can see here, they already have quite a few companies that are showing off that are on Agentforce, and there are many, many, many more. There's actually a video online too. You guys might know I invest in SharkNinja as a company, and there's a video with Salesforce and SharkNinja talking about how Agentforce has been such a good addition for their team. Now let's go ahead and get into the price action here, guys, because over the past few months, this stock has not traded very well. Over the last month, we're down. 3 months, we're down. Year to date, we're down almost 30%. But if you look throughout the lifetime of this company, it's just gone up and to the right. I think this is another one of those companies where the visuals look amazing. We have charts going up and to the right for subscription revenues. Obviously, their revenue, net income. They're buying back shares very fast. And they have good cash to debt. This company makes 40 to 45 billion dollars every single year in revenue. They have significant net income. They're buying back, they have significant cash to buy back shares with. And so I love it. Honestly, I think this one's going to go up from here. I think it's gotten beat down a little bit. One thing I want to share is AI is eating software, right? Quote unquote. And look what's going on with Salesforce. I just don't see that to be the case. I also want to show a couple other companies that are on the same trajectory. ServiceNow is also a company that's being told they're going to die to AI. Same with HubSpot, which is a competitor of Salesforce. So you guys might be asking, hey, Tanner, why don't you look at HubSpot or Monday or these other CRM platforms instead of Salesforce? And I'll tell you why. So I actually worked at a company for about 8 months, and part of that was to basically just dive in and get them a CRM system. And so I was tasked to actually, have the meetings to take a look at different CRMs. And I ended up going with Salesforce because HubSpot, Zoho, I looked at Monday, and Salesforce had the most integrations for what our tech stack was. And so you can imagine we were a startup, and it still had more integrations than the other companies, and some that we were a must have. And so you can imagine at an enterprise level, when they have a huge tech stack, they need to be able to implement that into a different type of system. So that's ultimately why I decided to go with Salesforce here. And I'm bullish on the future. One thing to note too, I did have Salesforce in the past. So I actually held the stock from about 2023 to 2025. So I'll actually look at the chart here. I invested around here. I think it was around like $200 a share. And I sold out at 260. So you can actually see, I tweeted this on July 14th. Because I think I made a really good decision. It's basically traded flat. I had a little bit of a gain, but since then, I actually got back in at a lower price than where I was. So I'm really excited about that. And then one thing to note too is just from an EV to free cash flow perspective, Salesforce is trading at the lowest it has since this chart began in 2017. So we are looking at a very juicy valuation here, guys. So that's the second stock. Let's go ahead and jump into the third. All right, guys, we're about to pick the third stock here. I'm about to show you that we went with Mercado Libre. So ticker symbol MELI. So I looked at my portfolio and I decided, hey, I needed a little bit of exposure to Latin America. Latin America is a they have a huge population and they are underserviced right now in a lot of different verticals, like banking and things like e-commerce, which I'll get into in a second. But Mercado Libre kind of helps with both fintech and e-commerce all in one. So a lot of people call them the Amazon of Latin America because let's go ahead and flip to my other screen here. We can kind of get into what they do. So they are not only a full-on wholesale, like warehousing logistics company, similar to how Amazon operates within America, where they're doing, next day deliveries or same day deliveries even. But they also have different products within they call it their yellow world and they have a blue world. So they have logistics where 94% of items sold on our marketplace are shipped through our network of fulfillment and cross docking centers. Like I said, just like Amazon. They also have advertising like Amazon has, where they have product ads within their website. They have first party retail as well. And then they have a third party marketplace where 90% of their GMV is from, where they connect buyers and sellers, is just like going to Amazon.com. But then they also have a blue world, which is their Mercado Pago. So it's so those words, by the way, stand for free market and pay market, I believe. I might be wrong. I'll put it here if I'm wrong. But they basically have an acquiring business where they offer solutions to merchants to enable them to process payments online via point of sale devices and QR codes. So kind of like PayPal, but also they have digital or like physical terminals where people can collect as well, which is fantastic. They also have credit where they have consumer credit cards, merchant portfolios, loans, all that. And then they offer as well several fintech services for their digital accounts where they have digital credit cards, insurance, savings accounts, investments. So I'd almost like call it more of like a SoFi and a Amazon rather than like a PayPal and an Amazon, but it's kind of a mix between PayPal, Amazon, and then PayPal, SoFi, and then Amazon as well. So this company is doing some great things. Let's jump into their e-com. So they're number one in e-com in so many Latin American countries. And what I really love about this is that Latin American countries are super underserved right now in the marketplace. Let me try to find where I'm this. Oh, here it is. So as you see here, the Mercado Libre markets compared to the United States. So the population compared to the United States is about half. Twice the amount of population that United States has. But then on an e-commerce penetration side of things, they're like almost half of the e-commerce penetration. So there's so much room to grow with online ordering, getting things delivered, via e-commerce. So much room to grow just within their home base. And then on the Mercado Pago side, they have so many different tools. We talked about credit and debit cards, consumer merchant credit. But what's great about this is that they are the number 2 fintech within Brazil, the number 1 fintech in their home country of Argentina, number 1 fintech in Chile, and then number 1 fintech in Mexico, all within Latin America. So they're doing great things, growing like crazy. You can see the revenue mix there is super well diversified, where they have a ton of revenue coming in a ton of different ways, which just tells me this business is not going anywhere. We can look at it from a perspective of the charts. Like I mentioned, I love charts and they're doing great things here. Not only is their logistics side of the business growing like crazy on revenues, but they're also growing like crazy on Mercado Pago. So they have 2 businesses all in one that are doing absolutely fantastic, and they can obviously merge them together in a very unique way. So look at these charts. Shares outstanding are not going up too much at all. They have so much cash, not that much debt at all for a company that's doing what they're doing. You would expect them to have even more debt than that. Their net income is beautiful. And then we can go ahead and look at this, which I really wanted to show off, is look at that CAGR over the last 10 years, a 43% CAGR, going from $0.5 billion back in 2014. Now they're doing $19 billion in revenue. It's grown revenue by 36% over the last 10 years. I love this stock so much. So I already owned it. This is one that I've already owned, but I bought 3 more shares. So now I have a position size of around, like, say, $10,000, give or take. From a price action perspective, you can see this stock has not lost any momentum, and I think that's warranted. I mean, this company from day one. If you got into this, whew, you are looking pretty as well. Over the past 5 years, we're up 100%. Over the past year, we're up 17%. And year to date, we are up about 36%, because about a year ago was kind of when they were hitting that high from their 1 year around $1,700. And they have gone up and shot up to a high of about $2,600. And now I got them out about 23.33, give or take, and really excited about that. Now, you might be asking what happened here. This was the earnings that recently reported. I think the earnings was absolutely fantastic, but it obviously had a market sell-off, maybe not as much growth as people were expecting. But I think part of that has to do with the FX headwinds. So foreign exchange from Latin American countries right now, not looking the prettiest. So they do need to, in their earnings, they need to relay that, because a lot of the money they're taking is not in US dollars. So it needs to be converted, which therefore, if the US dollar is a lot stronger in that time, it would make their numbers look not as great. So just keep that in mind too. But ultimately, guys, like I said, this is a company where I don't plan on selling this for any time soon. They have so much more growth potential. They have two businesses that are just doing absolutely amazing. So this is one that I'm very confident and very comfortable having within my retirement portfolio. All right, the fourth stock we have here is a nice one. It's actually the one I'm the most excited about, I think, of all 6 of these. By the way, I think at the beginning of the video I said 5, but there's an extra one out there. So with this, the fourth stock, and what I'm most excited about, I already own this stock in my individual brokerage account, but I also added to the retirement account. It is Nubank. I bought 1,000 shares of Nubank for $13,195. So Nubank is also a play in the Latin American market, but this is a bank that is absolutely destroying market share, stealing it away from everyone like it's candy from a baby. I'm so excited for this stock because their charts are some of the most beautiful charts I've ever seen in regards to how well their business is performing. And not only how well it's performing, but how it's performing in a macro environment that should not be favorable to them. So everyone, going into their recent earnings was expecting just a crapshoot of an earnings. Their stock sold down to even under $12 a share, and it just had an immediate pop after they saw how excellent this was performing. So let's go ahead and hop into the screen here, share a little bit more information. So right here is a good slide just to show you how dominant they are within Latin America. They currently have 60% of the Brazil population, which they're based out of Brazil. They have 13% of the Mexican population, adult population, obviously, using their services, and 9% of the Colombian population using their services. And the amount of customers, their average revenue per active customer, their revenues, their net income, all these things are looking juicy. Now let's hop into this one because this gives a better story. It's about the efficiency of this company. I think they have one of the best CEOs in the world to create such an efficient business in a macro environment that shouldn't be suited for them, just due to FX headwinds like I talked about earlier. It's the same story with Mercado Libre, but even on a bigger scale, because these guys are out of Brazil. The Brazilian real is not doing so hot right now. So that being said, this is insane. This efficiency ratio is a ratio that banks often use. It's non-interest expense divided by net revenues, and you multiply that by 100 to get the efficiency ratio. And you can see here they have a very beautiful 28.3% efficiency ratio. American companies, American banks absolutely would die for that number right there. So I think it's fantastic. You can see, if just to compare, if you can't see that, the blue is net interest income. And then this lighter blue here is F&C, which stands for fee and commission income. So there's so much income, and their expense ratio is only 28.3% of that, basically. So absolutely beautiful to see. And then from here, we can go into visual stocks just to look at everything as a whole. One thing to note is this number of customers over here and their monthly active customers. So their monthly active customers just reached over 100 million people using Nubank. So that's awesome to see. Revenues up and to the right, net income up and to the right, cash to debt. They almost have no debt at all on this company. They have beautiful there. Shares have been, shares outstanding is something that we want to keep an eye on, of course, as we do with all companies, but absolutely love their charts. And then I did want to show, it's funny because when I bought this, I actually tweeted it, and then Crossroads last night actually made a video on Nu and said he's buying it too. And I saw this tweet from him today saying, New actually just got a double upgrade to buy at Citi on potential earnings acceleration. So they had them at a sell at $9 and flipped it to a buy at 18 just because despite concerns on macroeconomic environment, the firm sees the recent quarter as a testament to the bank's ability to not only navigate well, but also accelerate in key portfolios while maintaining good asset quality. So beautiful, guys. I love this company so much. I have now, I'd say it's around like a $24,000 position, somewhere in that ballpark. And I plan to potentially keep growing this over time. All right, guys. So let's take a look at the fifth stock that I was purchasing. So the reason why I purchased this specific stock is because I looked at the portfolio and I said, man, I kind of want some more NVIDIA. I already have quite a bit of NVIDIA though. So I was like, maybe I should diversify, have a little bit more AI exposure in a different name. So I looked into companies like Marvell, Broadcom, AMD. I looked even into smaller players out there, but ultimately I ended up going with the Dutch King, which is ASML. And so ASML, just like the ticker symbol, it's the exact same name. ASML, it's a Dutch company. And so these guys are the top of the chain in regards to processing semiconductors. So they actually make the machines that TSMC and Samsung and Intel use to actually create the chips. So these huge machines are called photolithography machines. And what they are, they're using extreme ultraviolet technology or deep ultraviolet technology to be able to actually put the individual unique intricate patterns on the silicone wafers. And so that technology apparently is really hard to replicate. So I think ASML actually in the whole world has one of the strongest moats of any industry, any company, anyone, because no one else can replicate what they're doing. So China has been trying to pump a lot of money into be able to recreate these photolithography machines. Can't. United States has no competitor for them either, which is, baffling because US is typically the innovator of the world. And nope, not in this technology. So this Dutch company has been doing a fantastic job. So let's go ahead and hop in to just learn a little bit more about them. So we can go ahead and just take a look at what this machine entails. This is actually the new system that they have. They just shipped their first version of this system during the last quarter. So they're still innovating. They're still creating new machines that are just, being able to have increased capabilities for these companies because we are in an AI boom. There's no doubt about that. So let's go ahead and hop into this because I think for all of their things to note, obviously they're growing, they're fast growing. Because this AI boom, but they're also buying back a ton of shares. I think ASML believes that they're undervalued. Their stock right now is trading at about 740 and it peaked at around 1100. So they're trading at quite a bit of a dip. And so you can see that actually in the numbers here. They've been buying back shares, but in 2025, just through Q2, they've already purchased more shares than they have the previous year, the full year of 2024. So great to see. From a visual stocks perspective, this is going to look a lot different than what we've seen in these other stocks that I purchased. Is that this company is very cyclical. So you can see here on Q4 is typically the time of the month or time of the year where they're selling a lot more machines. That's because of tax purposes. Specifically, we're running around like end of the year buying these machines. So one thing that, I mentioned that shares outstanding, we can see them going down, which is great. Revenues going up, net income going up over time. That's fantastic to see. I don't really want to dive too much into this. Honestly, of all the stocks I own, this was more of like hey, all these other guys out there are talking about ASML. You got Joseph Carlson talking about ASML. You have guys like Aria talking about ASML as well. A ton of people in the retail community are already in this name, and I think it's just for good reason. They are a fantastic company. So like I said, let's go ahead and look at their last 5 years, up 100%. The last year, though, they're down 20%. So they actually peaked, as we see here, around $1,100 in July of 2024. And I think the real big reason behind the fall off in share price is due to the macro uncertainty because of the tariff situation. So the fact that they are not an American company kind of puts them at a little bit of a risk. But also there's companies like China who are also, having their own opinions on ASML as well. But in the long run, I just don't think that this company, that's been performing so well will end up faltering. And so I did want to share this because I think this is a really cool thing to take a look at. So the EV to operating income here is 21x, which is a very cheap multiple for this company. You can see, as although they're growing their revenues, they're growing their operating income over time, their share price is just flat. So, for a while it was trading in line with their growth in EBIT to revenue, but not now. So we're actually not doing so hot on the share price perspective, but that's kind of why I'm getting in. I think this is a deeply undervalued play right now. One thing to note too is just this company sells to Intel, Samsung, and TSMC. So whenever those companies are growing, which we know they are, TSMC just announced, they're gonna be expanding into America, into Arizona, and then we have Samsung, which is going to be, creating this huge plant in Taylor, Texas. And for example, Tesla and Samsung just entered into a huge deal where they're going to be creating the next chips for Tesla. So when you see news like this out there, that just screams one thing, like, well, not one thing, a lot of things, but they will have to be buying ASML's machines since they are a monopoly, since no one else can recreate their technology. When Samsung grows to create chips in a new plant, they are going to have to get photolithography machines from ASML. So let's go ahead and hop into the next one. All right, guys, the final stock we have today, the final buy and the biggest buy. This is something that you're probably not going to be surprised with. It's a company I already own a lot of shares of, and I wanted just to increase my position because I think over the next 10, 15, 20 years, this company is going to grow tremendously, and that is Amazon. So Amazon, it's Mag 7 stock, staple out there, of course. But the reason why I'm buying Amazon more today than any other company is because I feel like over the next 5-10 years, as we have humanoid robotics, I think Amazon is going to be the biggest beneficiary of humanoid robotics in the entire world. So Amazon, of course, is known for their e-commerce, their warehouses across the country to help with getting packages delivered to your doorstep every single day. Now, imagine a world where that entire factory is using robots. The car driving you is an automated vehicle, and then the package delivery from your doorstep or to your doorstep is from a humanoid robot. Also, drones, they're already getting into drones, using that for shipment. So the cost of doing business for Amazon over time, I think, is going to substantially decrease, while their service and what they provide to their customers ultimately will increase because they can get same day shipment, next day shipment at a better scale, faster scale with a lot less cost. And so really love this company. Let's go ahead and jump into, I don't need to dive too much. Everybody knows what Amazon is, but I want to go ahead and just jump into a little bit more reasons why. Amazon is growing on all cylinders. Their investor presentation isn't the most beautiful one in the world either, but they are still growing net incomes up 35% year over year. This company is growing as if it were a small company, but it's not. It is massive, one of the largest in the entire world. And there's a debate out there, who's going to be the first to get the 10 trillion. I'm curious your thoughts below. Who do you think is going to get the 10 trillion first? Some people say Nvidia, some people say Microsoft, and some people say Amazon. And I think it's going to be one of those three. If I had to guess, I would say maybe Amazon, honestly. Either Nvidia or Amazon if I'd had to choose. Now, let's go ahead and hop into their price action because year to date, they're trading basically flat. So for a company with as much growth, we had a huge dip here in April, just like everything else. But man, you'd be looking pretty if you bought this at any time throughout this year. We can go ahead and look at the 5-year chart and the max chart. I mean, still, I think this has so much room over time to grow. You've seen what this chart has done throughout its history, and I don't see anything different in the future either. And so from visual stocks, we can take a look at their store breakdown. So they have, not only are they e-commerce, they also have Amazon Web Services, which is the largest data cloud in the entire world. And they're growing, tremendously. Part of the reason why I think their stock has kind of been stagnant as of recently was because their recent earnings, their CEO, Andy Jassy, kind of, wasn't as bullish as he should have been on the future growth of Amazon Web Services. But guys, Amazon Web Services is not going anywhere. Obviously they're competing with Microsoft, Azure, and Google Cloud. But I think, just like Andy said, there's going to be multiple winners there. But right now they are in the lead. And so that's awesome. But they have revenue coming in, very diversified business, so many different ways. And then also they're looking to do more things. So as of recently, they just announced that they're going to be getting into grocery to compete directly against Instacart. and directly against any other grocery delivery services out there. So Amazon owns Whole Foods, so that's going to be fantastic. So they're competing against Walmart, Kroger, Target, now with Whole Foods and Amazon together. Just that's going to be fantastic. They've had Whole Foods for a long time. If you have the Amazon Prime credit card, you can go to Whole Foods and get quite a significant discount on your groceries. That's one thing too. I think their credit card's fantastic. Their Amazon web, their Prime membership is just a must-have to get deliveries to your doorstep. And then they're also, since they're such a huge company, they have so much money that's coming in. They have the ability to be able to just expand into multiple different industries over time. And so we obviously saw that originally with the fact of them getting into the data clouds, which was a great move. They're obviously expanding tremendously into AI right now. And then they're also doing things like with Project, I think it's called Cooper. I haven't looked too much into it, but I know that they're looking to have a satellite broadband network to help get internet across the world. So that's incredibly bullish on Amazon if that works out. I love this chart because you can see this is versus Walmart, and it's just the revenue over time. And you can see from 2014 to this year today, just 10 years, what this has done. Amazon is now ahead of Walmart as of 2025. It's going to be beating Walmart in revenue. And so we're just going to see that continue to climb year over year. And I love to see it, guys. So that's it for me for today. All right, guys. Well, that is it for me. This is the 6 stocks that I decided to buy with over $70,000 from my IRA rollover. So I appreciate you guys watching. I hope you guys appreciate the time. This took way longer than I expected because I basically did individual research and had to get my thoughts together in different slides for 6 different companies. So a lot of work that was put into this video. I really appreciate everybody for watching. I'll see you guys on the next video.